Hey, welcome to Harvesting Income. If you're new to this channel is all about how to make income and grow your income from investments. So, we're going to talk about some income oriented investments in this channel. And today I'm going to talk about HHIS, which is a very interesting income generator. Basically, if you're looking for a covered call ETF that invests in different, single stock covered call exchange traded funds. This is from the Harvest portfolios. I'm going to explain this to you, give you a quick summary, and then we will go into the details. So, this fund basically is known as the Harvest Diversified in High Income Shares ETF. And basically, if you look at it, um, this fund offers multi-sector portfolio that captures a diverse selection of trending companies that are positioned for strong growth. To put it in short, it's basically they are offering a mix of blue chip companies that have a strong growth potential. Plus, they also have the ability to deliver high monthly income using the covered call strategy. So let me quickly show you this picture. This tells you the whole mix of the fund. HHIS Holdings consists of all these big blue chip companies and along with their covered calls. I will show you Eli Lilly and Microsoft, which are also the Harvest funds. And this fund actually holds all these multiple funds within it. And each fund has a single stock plus a covered call along with it. Okay, let me go into the Eli Lilly, for example. LLHE is the name of the fund, and Harvest Eli Lilly High Income Fund. This basically invests in Eli Lilly, and they also write covered calls on 50% of the portfolio, and they also apply a leverage of about 25%, which enhances the returns. So leverage means borrowed funds or borrowings they use for buying more stock or to enhance the returns. And the management fee for the underlying funds is 0.40. I'll touch upon this when we come to the fees. And so that's about it. Like this is the single stock fund. The good thing about this fund is you are investing in LLE with a covered call option. So you're also getting benefit of writing a covered call and earning premium income along with investing in the LLE rather than buying the stock yourself. If you have to buy 100 Eli Lilly and then write a covered call yourself, the amount of money or capital required and the margin requirements are pretty high. So this fund enables you to do that. Just by buying into the fund, you allow the fund manager to hold the stock and do the covered calls for you, and for that you pay a small fee. That's how this works. And similarly, if I will show you Microsoft, it's the same model, same thing, but it's going to be Microsoft instead of Eli Lilly. In this case of Microsoft, you have a similar structure. The fund invests in Microsoft and Microsoft stock, and they write covered call on 50% of the portfolio, and 25% is the leverage, and that's the basic structure of the fund. And similarly, they have other big names, including um, all these Amazon, Palantir, Tesla, all the big names which you find in the S&P 500 or Nasdaq indexes. So all of them are in this fund. All the major blue chip ones, not every fund. So you can go into the harvestportfolios.com to know more. And for people who are in the US or in the American side who are watching this, you have plenty of options, guys. You have the Yield Max fund called the YMAX, which provides the similar kind of structure, similar kind of options. So even Canadians can look at this option, YMAX, if you're interested. And this is not any recommendation or financial advice. Do your own research. But today's discussion is not about this, but you can look at these funds which are similar. Now let's move back into HHIS, which is our main focus today. I'll give you a quick summary of the basic information. The ticker symbol is HHIS, and they have single stock ETFs of Harvest within them. And the distribution is 0.25 per month, 25 cents. NAV is 959 and market price is 957. The assets are about $200 million, reasonable size. It's a new fund basically, and currency is Canadian unhedged, and management fee is zero. But I told you already that underlying funds have a management fee of 0.40. That's the fee you're paying, and it's a high risk fund. Keep that in mind. And this is eligible for RRSP, TFSA, and different types of accounts. If you want to know more about this, you can consult with your tax accountant or financial advisor. And this fund was very recently launched, January 16, 2025, hardly like 3 months old now. So it's too early to make any assumptions or any conclusions on this, but we will just try to analyze this fund. Distribution is monthly, like you have a monthly distribution for these funds. Like I said, it's 25 cents a month. Let me go down and look at the distribution history. Here it shows that the fund paid about 25 cents February 28 and 25 cents in April, sorry, March and April, 25 cents. Okay. The pay dates are March 7th and April 9th, 25 cents. However, keep in mind that this can vary. Like this cannot be consistent, or this cannot be constant. I don't know if the fund is going to make it like more like a stable 25 cents and gradually increase it, or would they be varying? I'm not too sure. If it is consistent at 25 cents, or if it is going to be like a little bit of variation moving up and down, that should be okay for me. If there's a significant fall in the dividends from here, or if there's a too much of a volatility in the dividends, that can be a kind of flag that we need to check in future. Uh, okay, let's look at the portfolio. Like I already mentioned that these individual ETFs form part of the portfolio. When I look at it, it's like almost like equal balance of, you know, funds in the portfolio. Like it's balanced between all the different funds. It varies between 6.5% to all the way to 7.7%, like depending on the price performance. This keeps varying, but more or less it's kept at an equal level. That's the summary of this fund. Now I'm going to quickly share with you my observations of the pros and cons of the fund, which are equally important, and also share some thoughts. Hey, now I'm going to give you a quick summary about the HHIS, Harvest Diversified Income Shares ETF. Uh, yeah, we have the basic information on the top in bullet points. And the main thing that I'm going to share is my views as well as the pros and cons of the fund. The good things about the fund is it is a one ticket solution, great one ticket solution for covered call income from single stocks that are more volatile than the index. So if you are looking at single stocks and writing covered calls on those stocks, that type of fund, then this is the fund for you. However, if you're looking at index oriented covered call funds, there are other options. So there's a kind of trade off there. Like if you're looking for a single stock covered call ETF with a higher rate of return, then HHIS could be a good option. But instead of just one stock, you have a collection of different single stock covered call ETFs. So that reduces your risk. It's kind of diversified. And you have a higher income potential due to the moderate leverage. The fund has 25% leverage, and leverage is risky. On the positive side, it can give you higher returns. And on the flip side, negative side, you can also lose more money if the market goes down. So that's a risk that you have to live with, because there's a moderate leverage, but it's not that high, it's moderate. And there's a lower ticket size, like your ETF price is about $9 or $10 in that range. So it's affordable for anybody to enter into the stock or the ETF. And it's convenient access for Canadians to US stocks to do income investing into covered call funds. And it has a reasonable management fee is just 0.4% for the underlying funds. Keep in mind, this is a fund which writes active covered calls, and for that the fee is pretty reasonable. So those were the pros and positives of the fund. And if there is anything that I missed, any other points, please feel free to share in the comments below. Or if you have any other important information that I could have missed, please let me know. And if you're watching this channel and you like it, please feel free to share with your friends or family. Okay, now moving to the other side, cons. This is a brand new fund with the minimal track record. That's one issue. And however, the fund has good experience team with track record on diversified funds like HDIF, HRIF, etc. So they have some experience in this space. They know what they're doing. So that's something that is comforting. So that kind of mitigates this to some extent. But still, it's a new fund. Too early to make any kind of judgment. And distributions can definitely vary in future. So right now it's 25 cents a month, and you see a very high distribution yield, like 31% and all that. But future this can be completely different, and total returns are about 7%, like, because the fund lost 23% in terms of the price. So total return wise it's pretty, bad at the moment, but it's hardly 2 months, too early to make any judgment. And the fund is under high risk category, so this should be a very small part of your portfolio. And the upside is capped because of the covered call writing. The upside in the fund is capped, and this is true for any covered call fund. So so this is something to keep in mind, and you should start with a very small portion in the portfolio if you like the fund's performance, and if you observe over the next few months you will get an idea. And I'm also tracking this fund, and hopefully it has a pretty good performance. And I'm also looking at this fund and considering adding it to my portfolio. However, this is not financial advice, this is not a recommendation. And I hope you like this video and this coverage on the fund. And if you have any questions, any comments, any other points that you want me to look at, please drop in the comments below, and feel free to subscribe to the channel if you like what you're watching. Thanks, and have a great day. Happy investing.